Okay, recording this video on Saturday the 8th of January 2011, and hope your trading went well this week. We finally got the break I was looking for in the E-mini on Friday, so I hope everybody was able to take advantage of that. Before I show you some of the charts I'm looking at this weekend, just thought it'd be helpful to show you a couple of changes that I've made on the home page of Emini-Watch.com, just playing around with kind of the layout and the kind of the real estate I've got there. And the first change is the sidebar now has a whole series of links here. You can see them kind of in blue. They look a little better on the site here. The formatting on this kind of squashed up mini view is not kind of right. But anyway, what I've tried to do here is put the best of Emini-Watch in the sidebar, so you can kind of quickly get to what I view as kind of the best kind of articles on the site, and I've divided them up into a couple of segments. The first one is called Why, What and How, so it's kind of why you should trade, what to trade, how to trade, and so on. A series of articles on the better indicators, whether they're applicable to the forex markets, to commodities markets, how they work, what they are. Some of the articles here on practicalities of trading, so talking about kind of trading backup plans using tick charts, different software and hardware kind of setups, and then some random things at the end under this kind of more tag here. So hopefully that'll help you kind of visit some of the more interesting things on the site. Now the site has over 570 posts, individual kind of daily posts. I think it's important to kind of just help people navigate around and concentrate on the good stuff rather than the stuff that's old and not very applicable anymore. Anyway, so that's the first change. The second change is I've added this kind of subscribe button that'll help you get to the subscribe options for Emini-Watch. Now, some of these have been around for a while, and I've really never pointed anybody's attention to this, but you can actually get notifications of updates posted on Emini-Watch in a range of different ways. Most people, the vast majority of subscribers to Emini-Watch, are coming via email, so if you're happy with getting an email notification, just leave it as is. But there are some other options that you can get notifications, and I suppose it just depends on your preferences and where you spend the most amount of your time online. RSS has always been there. For me, I find that the most kind of convenient option for getting updates of all kinds of different websites, just because it all arrives in one spot instantaneously. There is a delay with the email. The email is only delivered once a day, 2 or so hours after the close, whereas as soon as something is posted to the website, that'll appear on an RSS feed instantaneously. So if you know about RSS feeds and want to switch over from email to RSS, I'd suggest kind of following that path. And then the other kind of social media that people are following these days, if you're into Twitter, you can get a notification via Twitter that there's a new update to Emini-Watch. All it gives you is just a link to the site and kind of takes you back to the site where you can watch the video or the latest kind of content. Same thing with Facebook. There's if you spend a lot of time in Facebook, you can just get a notification via Facebook page. YouTube, the videos are now up on YouTube, although the quality on YouTube is nowhere near as good as you'll see on the website. Again, if you spend a lot of majority of your online time in YouTube, you can subscribe to the YouTube channel for Emini-Watch and get almost instantaneous kind of access to the videos there. And then I know a lot of people have iPhones, and so you can subscribe to the podcasts in effect and get it on your iPhone, get the video delivered on your iPhone. And so there's a link to that via iTunes, an iTunes kind of podcast links. And then lastly, kind of a lot of professionals kind of signed up to the site, and so LinkedIn, similar kind of notification via a LinkedIn group. You can get kind of just notification of the latest updates there. So just to let you know, on the emails, you can easily unsubscribe from the email. There's a link, a one-click link at the bottom of every email that goes out. That means you can adjust your subscription, you can change the email address, and you can unsubscribe at any time from the email. So if you want to change your subscription to any of these different kind of delivery mechanisms, feel free to. And again, the place to go to on the site to get that is just click on this large red button saying subscribe for free. Click here. So Couple of changes on the site. I'm going to be getting rid of the footer kind of navigation links over the next week or so, so those are going to go as well, and try and just clean up the site a little bit more, because now it's more and more a video site. I just want to make the navigation as clean and easy to get around as possible. So there we go, just a little bit of housekeeping on the website. Okay, so in terms of the charts I'm looking at this weekend, first of all just a daily chart of the Emini showing we had about 1.8 million contracts traded on Friday. We closed down a couple of points. 1.8 million is about average, but it's the highest volume that we've seen over the last few weeks. And we kind of did press down to this 58 level that I said was going to be important. That level was coming from better X trend. You can see here, I mentioned this a couple of days ago. If we had a close below this 58 level, that would have been significant in terms of determining that we're in a downtrend. But we kind of hit that level, bounced from it. I think we were a quarter point or a half point kind of below this level, and we bounced back up to 67. And I think this kind of range between 75 on the highs and 58 on the lows is going to be really important. That's kind of what we're going to be batting between over the next few days, and determining where we go in the next week is going to be really important. From the day trading chart, you can see the 4,500 tip bar chart mentioned on Thursday. This ledge at 65 became very significant. That kind of was support initially, and then once that support kind of gave way, we fell very quickly and very hard into this 1258 level here. Best entry kind of came with this little rise into a cyclical turn on the 45,500 tip bar chart. Very weak buying, bearish divergence, and amateurs kind of playing at the highs there. So that's kind of got to be an area of weakness. In terms of longer term where we go from here, we've had our pullback, end of trend kind of warning signal on the 40,500 tip bar chart. We're in an upswing now. We've kind of found some support at this level at 58, and so I think we're going to be playing around these levels for a while. If we go down one time frame to the 13,500 tip bar chart, you can see coming into these lows at 58, we had a lot of professional buying kind of coming in. It was a flush signal, so effectively flushing out all the sellers at that point, and they couldn't do enough damage to get us kind of below this kind of previous low here. So that level kind of being tested will now go up to test the highs at kind of 75, and you can see previously we've had professional blue bars kind of come in once, twice, three times, and weaker buying. Having had our exhaustion buying kind of early on in the piece, each of these tops have been made on weaker and weaker buying. So we're going to get a little bit of kickback kind of rally from this up to these levels again. So what happens there is going to be kind of key. Do the professionals kind of come in again and take profits, and we have another swipe back down at 58 and eventually kind of break it? In terms of looking at kind of alternate markets, I think we've still got a few days of weakness going forward. This is the daily chart of E-mini. You can see all these kind of distribution patterns. And I've talked about this with kind of the larger than average trade size that we've had over this Christmas New Year period, showing distribution, and then all these volume distribution patterns, no demand, Rambo patterns, profit taking, and so on up here. And you can see this weaker and weaker buying coming into these highs, with these flush signals. But then bond market, on Wednesday's trade we had a large professional down blue bar into the lows, kind of testing these 118, 119 levels, and we bounced from there. I suppose I expected after this kind of spike down, this volleyball spike down that we had a week ago, I'd have expected this to rally a little bit stronger, but we're still holding above this cyclical support area, so I'm still expecting us to have a crack to the upside during next week. The Euro's been kind of interesting, extremely weak activity over the last 3 or 4 days here. We made it to 134 and now we're down at 128, 129. But the last 3 days we've had these professional blue bars kind of come in, similar to what we had kind of previously here. However, we're still a couple of days away from a cyclical turn on better sine wave here, so I'm expecting this move to start to bottom out and to find some buyers at these lows, but we've certainly not made the lows yet, because we've got a few days to run on better sine wave, and that's also true for a number of the other markets here. Again, with copper, professional blue bar, kind of extreme selling, kind of coming at these levels, but we're still a little bit of a ways from a cyclical turn. Crude's been extremely interesting here. Although the last four days have been these blue professional bars, down bars, kind of getting into the market here. The amount of price destruction on the downside with these lower lows has been very, very small. That suggests to me that kind of coming into these lows, the professionals are really buying in, or else they'd have let this market go. They'd have shorted it early on in the piece and then let it go to find substantially lower lows, kind of closer to kind of historic support levels to get in. But in terms of they're buying back in with incredibly small moves to the downside here. Let me just switch on beta sine wave. And you can see we're still a couple of days away from a cyclical turn on beta sine wave, and all these markets look fairly similar in terms of that timing. So still going to have weakness over the next few days in these markets, but then later on in the week we're going to be coming into kind of cyclical support areas. And then similar type activity in gold. The professionals have started to get back interested at these lows, but again we're still a couple of days away in terms of cyclical lows. And there we go on beta sine wave, a couple of days away. So there we go, just a couple of charts showing my thoughts for next week, and hope your trading went well this week.